Hey everybody, welcome back to the channel. I hope you all have had a great weekend. I hope you are getting mentally ready for the holidays that are coming up. Christmas, New Year's, everything's right around the corner. So let's finish this year off strong, right? Also, I do want to mention that I post a watch list a day in advance or usually before the video gets released. So you can use it as a form of homework to prep and create your own analysis before my videos get released. So make sure you follow me on X at ABTrades to get this list out before my actual video comes out so you can then compare to see how your analysis did with mine. Also, another note, I released a checklist market guide infographic as well on X/Twitter. The purpose of this is so you have a little guide to use as you chart every day. The objective is the more you can cross off and or answer, the better the outcome of the trade can be. Remember, confluence is your friend, and I try to really bring together all of the more important elements and or criteria that I think is really important to me when I am charting. As always, remember, none of this is financial advice. This is just me sharing how I'm approaching the market this week and hopefully give you a few ideas to add to your own. So let's go ahead and get started. So right off the bat, we're going to do a little bit of an ES and NQ breakdown since my watch list isn't that large this week. Um, Nothing too crazy, so we can actually fit this in. Now, one thing I want to mention when I cover NQ is NQ actually did deliver really nicely into discount. Now, one thing I want to point your attention to is when NQ did deliver into discount, look at what we did down here on NQ Daily, right? The candle that we had on Thursday, of last week, did not sweep Wednesday's low. And we did get price delivery into discount, right? Based off of like the overall leg. I mean, if you draw this out, you have this. If I bring this out, right? Swing low, swing high, higher low. And so we did come into that point of interest and actually get pretty good delivery out coming into Thursday and Friday. Friday gave us a really nice displacement candle that closed near highs. And now we are seeing a little bit of a gap up today, but we have a good reference point to utilize from Friday. So as long as we can continue to develop now, we have a supportive volume imbalance between 25.2, 25.24, and we have this really nice confluence from the daily inefficiency established from Friday, 25.4 up into the 25.6. Now, what I want to point your attention to is how this kind of all got created. And so NQ failed to sweep Wednesday's low, right? But when I go to ES, and this was two of the scenarios that we had outlined on ES for the group, depending on like what we did into these first areas, right? If we didn't find any stability here based off of our daily inefficiency, we would have maybe dug down a little bit deeper into a more supportive confluence and maybe 50% of Thursday the 20th candle. Now, look at what ES did. ES actually took out previous day low from Wednesday the 17th, while NQ, if I go back and reference, NQ did not. So we had some really nice SMT, bullish divergence, headed into our discounted zone. And you can see it a little bit cleaner as well on QQQ, right? Did I click the wrong QQQ chart? Well, I guess if I do this, you'll see it as well. Maybe I don't have it drawn on this one. I thought I did. My apologies. But like look at QQQ, right? QQQ kind of did something similar. SPY also nearly came in a discount almost. So when we go back and reference ES and NQ, right, we have very supportive confluences now. And the main objective for me is I have a bullish bias up into 69.30, 69.45, and 69.60. See if those areas get taken out headed into end of year, or whether or not like they want to use some kind of dip within these two little areas to then trade back into all-time highs. But my stance right now is bullish as long as ES stays above 6824 and I have 6858, 684 or 6836. So we have 6858, 6836 and 6823. If you want to be more exact, this was going to kind of be my reference point and where I think buyers can get properly established. We also have a nice gap up that, gaps do tend to get filled, so we could see some kind of retracement, but as long as these areas here hold, I would like to see some kind of stability that eventually runs us up back into those new highs. And I like how it was developed due to the SMT into our higher low and or optimal trade entry established via divergence between ES and NQ. So I have a bit of a bullish bias um, based off of price delivery from our point of interest. So things can still work in favor of buyers, and maybe NQ actually wants to go in and sweep the high at 26,127, as that has not been swept yet. 26,127 would be my objective. It has not been taken. 26,115, 26,108, 26,118. 26,108. So you can see that this high here from the 5th of November has still not been taken. And so if we had SMT from our optimal trade entry, I would like to see price try and tag that out. And then we'll see what kind of reactions we get here, whether or not continuation exists or not. So that would be my bias headed into this weekend, early next as well. Those would be the levels for ES. Just make sure you have that kind of criteria established. This is where I would want to see buyers stay above, and if that is the case, then all-time highs. So getting right into it, off my first analysis is RKT, Rocket Companies. Now, this one's one of my favorite charts right now, and we did actually cover this in ABTrades back in the 17s, and so a lot of us are up a good amount, but a specific scenario I am tracking, assuming there's no continuation. I mean, we already got the dip into discount. So are we going to go for like a 3 driver back down that then rips? Or are we going to now develop against the bullish confluences here on the daily, right? We have a really nice imbalance paired with a gap. So does price trade around here or dig into the gap and then run higher? Ultimately, though, both scenarios, or all scenarios that I have for this, as long as we stay above the mid 17s, I do think Rocket can eventually start trading back into 20.8, 21.7, and 22, completing the overall standard deviation leg. Now that this whole entire sequence has started to flip and support buyers based off of the structural trend. So we had the structural change from our inversion. We have now a set of higher lows, higher highs. Can we establish another higher low into a higher high? Right? Price is coming into discount. And this is also, if you have your checklist, the checklist that I just posted, if you go and download it from my X account, you can even go in and understand how many pieces of that checklist actually match RKT, right? Prices in a bullish trend. We're getting a nice retracement into our optimal trade entry. We're coming off of a really nice structural change from an inversion gap, right? We have a lot of good supportive PD arrays in between the 17 and 18.4 area. And so I really like the outlook of this, whether or not this delivers down one more time for that 3rd driver, or if we just consolidate above 18.3, I would like to see this push up into the high 20s and stuff. So that's my analysis for RKT. Second on the list, and these are going to be a little bit quicker because they're all kind of very similar. And so the first one on that is MA. So MA, Visa, MS, related in the finance sector. And I really like how MA has changed the narrative. And something I tell my group is whenever you're in a trend, a lot of the times the trend starts to approach the next curve. So what I mean by that is when you're in an uptrend, we like to call that the buy side of the curve because you're taking, so if you're in an uptrend, you're only taking your buy stops, right? And when you're in a downtrend, you're on the sell side of the curve because you're only taking your sell side stops, each of those lower lows, right? And so when I tell them, hey, a good way to identify these things early on is if you actually create an inverse head and shoulders at the top or the bottom of the trend. So let's say we have this uptrend here, right? And this is a good little tidbit for you guys to remember whenever you're looking for structural changes or reversals. When you get that initial move, look at what happens. At the top of the range, you have a head and shoulders. At the bottom of the range, when you're in a downtrend and you're changing, you get an inverse head and shoulders, and then that changes into your buy side of the curve where all those buy stops start getting hunted, or it changes into your sell side of the curve where all those sell stops start to get hunted. Pretty cool, right? And it's something that happens so much, and I tell everybody in the group this. So when I go back and look at MA, this is in a clear structural downtrend, right? Lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Wait a minute. Look at what price does. We went from a lower high, lower low, lower high, higher low to then higher high. And now the point of reference that I'm trying to make here is based off of what I just told you. When I drag this out, sorry, if I come in here and I drag just this little sequence out, what do you think it looks like now? An inverse head and shoulders at the bottom of the broadening. And look at how now structure has changed. Higher low, higher high. And now we're building. Price is now building very nicely and supportive of buyers against your last breaker. So you have a breaker and a breaker, and look at how well price is defending that. So now I think this can get into an aggressive buy side of the curve where now we're looking for all those previous lower high targets. So our first one would be up in this range, 570s, 580s, 583s, 586s. Then we do have some kind of OB here. So I would maybe say that this kind of pushes up into the high 580s, low 590s. But the development of this supports that upside continuation. Whether or not you dip or not, anything in between 550 and 570 is buyable. I just really like the structure of this and how everything changed. And one of the things from the checklist is if you came into a point of interest, did price displace out of it? This is exactly what I talk about, right? Just because you have an optimal trade entry or you're at discount, it doesn't mean it's valid. What validates or gives merit to when you come at a discount is the reaction price gives you. So we know that we're coming into a higher low area where potential buyers can step in. This displacement candle tells you they stepped in. So now the development has changed. Sorry, I think I spent a little bit too much time on this, but it's just, man, I like all of this is important. And that's why I created that little checklist guide, because if you come in and look at RKT and MasterCard, a lot of those things you'll be able to check off and you'll understand why they make really good trades. Next up is Visa. Is very similar to MasterCard. So I won't spend too much time on this. The only reason I like this one as well is because you have really nice weekly LRLR into your weekly higher low. So you can see from this swing low to this swing high, you get one driver, two driver, three driver, and then you get the aggressive displacement out. And now price is inside week against your previous month highs with really nice displacement that came out from last week. And so into the 2-day and 3-day, you're pretty much just building here, and you did come into that weekly discount. So I would love to see a run of highs back into 360 relatively quickly. MS is also very similar. You have really pretty buildup on your 4-hour and your daily. As you can see here, you're pretty much setting up a nice form of your staircase compression that I like to talk about. You're pretty much absorbing price while you're still kind of validating the overall structure of the trend. And now you have some really nice LRLR to pretty much take out if you do get a run into those highs. So for me, if you don't get any continuation here, maybe one more deep dive that then runs, or you pretty much just kind of build out here and attack those highs. Really good structure, matches the similarities with MasterCard and Visa. Next up on the list is Disney, and the reason I want to talk about Disney is because it's setting up really pretty on the weekly. And this might not be something that trades within this week, but this has been a base that Disney has been stuck in for, pushing into January, this would be nearly 4 years of basing. And what I like about this is we just came off of a sweep with a really nice displacement and aggression back into the range highs. Now, the only reason I'm paying attention to it is because what we did into that discount. Rather than selling off as we've done within like the last 3-4 years, every time we've tapped the top of the range, it's gone down to the bottom one. Although this time, we didn't aggressively displace down like we have in the past. this time what we did is we actually kind of compressed and absorbed price. And as we came into that discounted zone and filled the gap, look at what price did. We get a really nice responsive candle. And while we kind of aggressively push into those bottom end of the ranges, we never really had aggressive counters like that. So I'm paying attention to Disney because we just had an aggressive counter from the point 0.5 after a gap fill and a potential little daily breaker here. So I love the confluence between Disney. If we can remain above, I would say like 104.2, then we won't go for a deeper discount. But if we do understand this is still a scenario into maybe like 2026. But if we can build above that 104, I do think this is getting ready to push up into the 125, 126 area. Granted, the amount of time this could take, because I mean, you have to also consider like this has been in that kind of compression state slash retracement since June. So this could take a while, but it's definitely something to pay attention to if you don't get the full delivery down into your golden pocket and build above 104, right? Two scenarios for me would be build above 104 and eventually attack 125 or get a deeper retracement, but both sides point to higher for me. Next up on the list is Intel, and this one's just based off of daily development here. Um, I, I like the little broadening that it's in, and I like how each broadening lower high gives you some kind of aggressive retracement. The only thing I'm paying attention to here is that you do have a gap and you are at a potential higher low from swing low to swing high. And price did kind of give you that staircase compression. It wasn't just a, oh, we're going to aggressively dump lower and lower. Rather, it was very slow and methodical. So I am keeping an eye on Intel above like 35. If we could stay above 35, I would like to see this attack the 30 mid 38s and maybe back into the 40 range. And if that does happen, this could give you a broadening continuation back up into the high 45s. This is a slow mover, so definitely something to pay attention to. But if you do lose the 35, then the second scenario would be another broadening sweep into the gap that eventually trades out higher. Google, this one's kind of a straightforward approach using the 4-hour and daily leg. So I took my swing low to swing high. We did come into a golden pocket, and I did tell the members in ADEX, hey, watch for a sweep of the 296 and then see how price reacts into that little volume or supportive uh, air pocket for buyers on the 4. And you got now a gap up that countered your displacement candle from the 17th. So you also have a really nice pair of inversions here. Inversion paired with a gap up, price consolidated and started to push through. So for me, as long as we stay above 296 from here, I would like to see Google attack 314 and maybe even threaten the overall highs. I mean, you do have a really nice trend here, so for the short term, they could kind of push you up here and then retrace and then go higher. But I have a bullish outlook on Google as long as we stay above that 294, 295. And this is just part of that higher low golden pocket, air pocket, uh, really nice 4-hour sweep. So like 4 pieces of confluence, and you also have your William VIX kind of popping up there. So like 4 or 5 pieces of confluence to see if buyers can now take over from here. And you can see a lot of this is very repeatable, and that's why I gave out that checklist, because it's like that's the whole point of this is like you want to make it repeatable, you want to make it boring, because that's when you know you have a system that works, right? When you do the same things over and over again. I mean, that's why professional athletes are so good, right? Because they practice the same things over and over again, and that's why they become really good at what they do. It's crazy how powerful repetition is. For Qualcomm, what I'm looking at is, excuse me, I just took a little sip of soda. It's kind of this little 4-hour trend here and how we kind of flipped it. And I like the hourly structural change, but what also has my attention is this weekly, right? So if I come in here and I delete everything, look at what this weekly has been doing, right? You've pretty much rejected every single kind of weekly close above like your 172 up into 177 since 2024. Now look at the difference in the development over here. Now you're getting weekly displacement candles and you actually held 1, 2, 3 times now. And so I think as long as you can stay above 168 for me, I think Qualcomm is setting up for that next phase of its expansion. Now it could take some time, but it's just like look at the point of interest here. 3 weeks, 1 week that closed above, and now 2 weeks that have kind of been developing and basing where you used to reject. And so for me, when I come in here and I take my deviations from the manipulation leg, right, you push down, push up, aggressively sweep, and then change the 4 hour structure, I'm looking for a potential move on Qualcomm in 183.8 and 188 to pretty much kind of complete this. And I want to see this stay above the 167.60, 168 range. I don't really want to see an aggressive candle that loses that, because then all this becomes a short and you target all those lows. So in the current moment, I want to see this kind of develop above that 167, 168 and start to target the 183 and 188. Really, really pretty development. Really nice 4 hour structural change. I like the way the weekly is starting to shape out and hold where it hasn't been able to. So those are all good first indications. Next on the list is BTU, and this one is just crazy, crazy, crazy. I mean, you're in a really nice weekly compression state here, and I think it's getting really close to just giving you a very large move, similar to what happened back into the 19 and 36s. And if this develops and continues to develop above 20, 21-ish, I'm targeting 37.7, and then I go into the 2 week, which is a bit of a higher time frame here. I'm looking for that 37 sweep, then I'm looking for 40 and potentially even 45. But this is building out really nicely, and I would love to see the outcome. And also, you can still set up traps. So if you go for an LR sweep down, put in a PO3 and then run, that is also a scenario, as earnings is coming up within the next month or so. Next up on the list is PG, and I like this one because of the potential power of 3 and inverse head and shoulder that could develop here, which is also something we just covered earlier in this video, and it is a scenario I'm trying to pay attention to here. If you do get that delivery in the discount, I do want to see how PG reacts in between the 140 and like 143. So a $3 window to see if it can hold, and if it does, I am looking for some kind of higher low to then complete the overall expansion of this power of 3 here. I mean, price consolidated since October. You got the breakdown with displacement paired with a gap, displacement into new weekly and monthly lows, and then look at how price aggressively reclaims the range. You displace, gap, displace, gap, gap. So if this is going to have any merit, why would they bring you back into the range? If this is going to be an overall downtrend, you should have respected that last lower low. But instead, you ended up reclaiming it and coming back into the range. So now I'm looking to see if this is going to actually be a structural change. And so if that 140, 143 area holds, I would like it to be a higher low that then develops into that inverse head and shoulders that then attacks the buy side of the curve. Oops. Oh man, I can't even type. So I would be keeping an eye on PG as you start to develop a little bit lower. If you lose the 140, like the 140 mark, then I would then attack new lows into 135. If you lose like 140, I would short this down to 135, 135, 136. One of my favorite charts into this week, apart from RKT continuation and the finance sector, is actually Autodesk. This setup is a 10 out of 10 for me because of the confluences that exist here, right? So pull out your checklist and I'll actually walk you down a few of the things on here. Just let me go get my notes. All right, so not only did you have a changing your state of delivery, you had your market structure shift, because if you come in here and do this, you go from lower low, lower high, lower low to higher high. So you have a structural shift here, right? And then now you're engineering liquidity. So when I talk about engineering liquidity, is you're creating a really nice set of LRLR. And that LRLR is when you have a really nice set of compression. And the LRLR that I like, and I talk about this all the time, and why I reference the staircase, is if you have something like this, you can easily start to run and take a step through each of those, right? You can easily navigate. Now, let's say you have something that's doing this, super steep and aggressive. It takes a lot more effort to get over each of these hurdles, right? As opposed to this one, which you could probably just walk right through. So that's what I talk about this staircase compression, or when you're engineering liquidity, is are you compressing it in a way where there's no real obstacle to keep you from going further. So this is a really good scenario of how price is being created here and engineered because of the confluence that exists from where you bounced. You have a supportive gap, you have a really nice higher time frame OB, you're into your golden pocket, you aggressively displace and then you counter that displacement, right? So you create a lower time frame inversion and you're also getting really nice displacement out of your golden pocket. And now you have a supportive daily candle here from Thursday the 18th. So as long as Autodesk can stay above like 293, I would like to see this kind of build out and start to trade up into 304 and 311. Really, really pretty chart. The only thing that sucks is that the option spread are terrible on this. So you might have to just be okay with buying shares or just using this as a case study moving forward in terms of everything that this has to like set up. But it's one of my favorite charts headed into this week, and I just got to keep watching it based off of how well can this stay above the 291, 293 area. Next on the list is a very simple one. This one's just Dick's Sporting Good, and it's based off of the monthly sweep, followed by a really nice aggression candle that changed the overall structure. Now we're back into our potential golden pocket with some supportive PD arrays here as well. If DKS can stay above 205, I would like to see this start to attempt a run into 220 and 223. Very simple chart, very straightforward. Can this establish the higher low to trade back up into the 220s? Nothing too crazy there, straightforward. Another one is GE, and I covered this one in X, and it's so far following along very well to our little squiggles. Basically, you have this really nice form of engineered liquidity in a pretty clear downtrend. If I go into the 4-hour here, whoops, as I have highlighted here, once again, you get a really nice displacement candle from the bottom of the broadening that kind of inverts a lot of this, and then you put in a really nice gap up slash displacement. A very nice aggressive candle that takes out a lot of those previous lower high pivots. And I talked about, hey, now that we're addressing and getting some really nice displacement, watch for potential dip from over here. And we got the dip that we wanted. We actually came into a potential hourly golden pocket. So you can see here, we came in a discount. You do have a really nice SR flip. You also have a supportive gap and imbalance. And then you gap up against the gap down, followed by another gap up. And so pretty much from here, I'm just looking for that continuation on GE. Nothing really has changed. Our squiggles are working really, really well. I would like to see follow through. Follow through into 311 and 317, which would put you at new all-time highs on GE. Next on the list is Amazon, and this one's just based off of the potential confluence off this gap and the potential golden pocket slash LRLR. You can see here you have a really nice buildup of price. You're kind of absorbing and accumulating. You haven't really had any aggressive counter moves that give you continuation. So like, sure, you're getting some little moves that push you down, but you're not getting the follow through. Instead, they kind of build you back up. So I'm looking to see if Amazon can stay above 220, can this give you a push into the 235 and maybe even as high as 238? If you lose the 220 area, I would short this back down into 214 and 211. Airbnb, I just want to highlight this one because we covered this one a while back in the watch list, and I just want to say how well this played out. And something that I think should still be on everyone's radar if you do get some kind of pullback, right? Really beautiful PO3 with LRLR and the reclaim of your gap or range lows, right? This is where sellers were where buyers were very prominent until you displace through. In a real world, if you're going to break below a range, you should reject and continue down lower, right? But when we talk about those flips or those aggressive reclaims, this is one of them. Why did buyers take this back above the range after sweeping it? Manipulation. And now you get that really nice expansion up that completes the move and you take out all of those upside stops, right? All of those buy sides have now been taken. But when I go into the weekly, this is weekly displacement, weekly displacement, weekly displacement. Price has an objective right now. And whether or not you get some kind of dip that pushes you back into the week, I would love an inside week that then pushes up higher. I think that would be one of the best ways to kind of trade Airbnb moving forward because we've already completed the PO3 and a lot of us did sell out our swings from it like around 130. But I think if you get an inside week or if you get some kind of push, watch for that dip, because if you don't get a straight move into 144 this week, maybe some kind of dip comes, but I am targeting ultimately 144, 145 to complete the overall weekly sequence on Airbnb. I don't think this is done at all by any means. You do have some potential exhaustion, so wait for some kind of retracement. But on that retracement, I would definitely scale for like February OPEX and target 145, 150. And so without further ado, that concludes our watch list. As always, I do these videos for you and hopefully paint a new light in how you can see price action. As always, subscribe, comment, like, leave some comments, share some feedback with me how these watch lists have been doing for you, or if you've been successful with some of the trades that we cover in here. Let all your friends and family know about us. Let's get this page to 5,000 subscribers. Hope you guys all have a lovely Merry Christmas and a Happy New Year's, because after Monday, Tuesday, I will be gone until January 5th. So until then, I wish you guys all a lovely Merry Christmas and a Happy New Year's. Peace and love. See ya.